Joining me now is Hennion and Walsh Asset Management President and Chief Investment Officer Kevin Mahn. Also with us is Mark Tepper. Kevin, thank you so much for joining the conversation. Good to see you. On a day that the market has a firmer tone, futures indicating a gain at the start of trading after an upbeat forecast from Micron Technology, the largest U.S. memory chip maker, sparking a rebound in technology stocks. Meanwhile, President Trump addressed the nation last night from the Oval Office, laying out his economic vision and key policy priorities for 26. Watch this.
You will see in your wallets and bank accounts in the new year, after years of record-setting falling incomes, our policies are boosting take-home pay at a historic pace. For the first time in years, wages are rising much faster than inflation, and next spring is projected to be the largest tax refund season of all time. Because of tariffs, along with the just passed One Big Beautiful Bill, soon announce our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot, and mortgage payments will be coming down even further. In the new year, I will announce some of the most aggressive housing reform plans in American history.
Kevin, you've got to believe that we're going to get a little bit of a tailwind in the early parts of next year because of this big, beautiful bill. What kind of a backdrop are you expecting?
Yeah, without a doubt. I think we'll see a continuation of this bull market run in 2026. I think you can find investment opportunities if you look into all the areas where billions of dollars are being spent and will continue to be spent, and that revolves around AI infrastructure. It involves aerospace and defense spending. It involves healthcare innovations and a likely pickup in small cap biotech M&A activity. And it also involves the outlook for moderating inflation and modest to not above average economic growth. That's a very attractive ground for investing. But that attractive ground will also come with more short-term bouts of volatility. In fact, I think there'll be more volatility in 2026 than there was in 2025 because we know we got certain key dates on the calendar, one being midterm elections, two being the continuing funding of the federal government, which comes up at the end of January. So expect more volatility. But over the long term, I do believe 2026 will be another good year for investors, Maria.
Yeah, by the way, we don't know if we're going to get another government shutdown at the end of January. It seems that all the congressmen that I asked keep telling me the same thing, that, yeah, if they can shut it down, they will shut it down again. And yet, we spoke yesterday with Louis Navellier, and Louis Navellier, who has been spot on this market for a long time, he's been a growth investor. He told me to expect 5% growth in the economy at some point next year. Watch this. What is your assessment of the macro story? How do you want to be invested in 2026, Louis?
We're going to hit 5% GDP growth. We're running 3.5 to 3.8 now, but they're going to be revising it up because the trade numbers, the trade deficit's the lowest in 5 years. The exports the second highest ever recorded with low oil prices. So that's going to big upward revisions. Obviously, a lot of the growth was onshoring, but even and the data centers. But if you look at the data centers, their order backlogs are up 20% quarter-over-quarter. So we're going to enter the new year with we're going to hit 5% GDP growth.
Wow, Mark, I was struck by that 5% GDP growth. Were you expecting that?
That's high, but here's what I'll tell you. I mean, when you think about GDP growth, if we're not adding a ton of jobs, all of that economic growth is coming via enhanced productivity, which of course a lot of that's coming from AI. Now, you know, we're next year, 2026, is a midterm year. And one of the things that I'll say, Maria, is that I'm expecting in this new era of AI productivity enhancements, I'm expecting a higher unemployment rate. Just by default, due to the fact that a lot of companies can do more with less. And I think that is going to be something that the Democrats are going to try to use. The Bernie Sanders of the world, the far left socialists, they're going to try to start pitching universal basic income again as a solution to a period of elevated unemployment due to this AI productivity. So that's just something to watch out for.
Yeah, productivity is the right word to use in the new year. That's certainly going to drive this economy. But Mark, what'd you make of Medline? The stock surged better than 40% in its market debut. It raised more than $6 billion. It was the biggest American IPO since 2021. The Blackstone and Carlyle-backed company priced at $29 a share, valuing the medical supplier at more than $50 billion. And look at this, it closed at 41. The strong debut signaling renewed investor appetite as bankers watch for potentially blockbuster 26 IPO pipeline. You've got companies like SpaceX, Anthropic, all considering going public next year, Mark. That should be good for the banks.
It should be great for the banks, but it's also great for the economy overall. I mean, you're not going to IPO in a recession when your multiple is going to be low. You IPO when the economy is booming. Beyond that, I think this is also indicative of investors kind of getting back to appreciating profits. You know, over the course of the last few years, investors have appreciated spending on AI, and they've kind of, looked past profits. This is a company that's been around for half a century, durable profits. So this is something that's going to be front and center again. Again, the economy, I'm expecting in 2026, good growth overall, but I'm expecting a broadening of the market. I think you want to be in some of those other sectors beyond just being concentrated in AI names.
Yeah, it's a great point. You're right. We need to see a broadening out anyway. I think there's tens of billions of dollars in IPOs in 2025. What do you make of that, Kevin? 5% economic growth. And I want to also take a look at the Fed as we've got yields this morning on the 10-year. Once again, we're looking at around 4.1%, but the yield is now pulling back almost 2 basis points. We're waiting the consumer price index this morning. It's out in about an hour and 10 minutes, 8:30 a.m. Eastern. This will be the first inflation data piece released since the government shutdown ended last month. We're expecting, economists are expecting an increase of 0.3% for the month over month and 3.1% year over year. Kevin, rather.
Yeah, I'm still recovering from Louis' 5% GDP forecast for 2026.
I know.
As I recall, just last week, the Federal Reserve updated their forecast for real GDP next year to 2.3%. So Louis doubled that. I hope we get there. But to get there, we're going to need
just to be fair, I think Louis talking about it'll be 5% at one point in 26. I don't think he's expecting 5% growth for the whole year. But go ahead, Kevin. Sorry. I know, it's a big number.
That's fair. Yeah. But to get to that high of a number, even if at any point during the year, we're going to need the AI revolution to be alive and well, and we're going to need AI infrastructure spending to continue, Maria. During the first half of 2025, AI infrastructure spending matched the contribution to GDP of consumer spending. So if the consumer does pull back at any point in time in 2026, we're going to really need that AI spend to increase going forward. Yeah, aside from that, inflation, we're looking somewhere between 2.9 to 3.1% today. I think we continue to see moderating inflation in 2026. That will give the Fed more reason to lower interest rates.
Sounds like you're expecting another good year, Kevin.
I am expecting another good year. I'm cautiously optimistic, but if you follow the money, there's many investment opportunities ahead.
And we'll do that. Kevin Mahn, good to see you. Thank you so much for being here. Mark, you're with us all morning. We're so grateful for that.